Morning, welcome to Ainsley News, Thursday, 2nd of July. We're talking Robinhooders today. Why Robinhood could fuel the next golden crypto rally. Much has been written about the trading platform Robinhood and its users, with some even calling the share market rally the Robinhood rally. The free trading app has exploded in use from 1 million to 2016 to over 13 million, and at an average of 31, they are predominantly millennials. The app is deliberately designed with a gamer feel to it and feeds on FOMO, with a leaders list ironically ranked by popularity and the like, prompting young users to check in throughout the day more than their Facebook or Instagram account. There are also social media influencers pumping shares and investment strategies. Throw in lockdown boredom, free dole payments from governments everywhere, and don't fight the Fed backstop narrative, and it's a recipe for trading hysteria. Two examples highlight the level of stupidity, with firstly, the already officially bankrupt Hertz shares being traded from 56 cents a share, now at $5.53 for a bankrupt company. That's 900% gain in 2 weeks between 26th of May and 8th of June for a company that's already filed for bankruptcy and carried $17 billion of debt, accounting for 90% of its total capital and next to no income during the lockdown to service it. Prior to Hertz going bankrupt, there were 43,000 Robinhood accounts invested in the company. At the peak of that buy-up in mid-June, that had exploded to 171,000 accounts after bankruptcy. One of the aforementioned social media influencers is Dave Portnoy, who famously picked shares from random Scrabble tiles to prove he could outperform the big hedge funds because everything goes up. The Robinhood phenomenon speaks to a number of things. Firstly, as the name suggests, it allows those who previously felt that only the rich could profit from the Fed-inflated markets to participate. That speaks firstly to the effects of the social dislocation of current central bank policy, which has enriched the rich and left the other 90% behind. This from CNBC. We've seen a major paradigm shift for broader financial services. Robinhood CEO or co-CEO Baju Bhatt told CNBC in a phone interview. People that previously didn't feel the markets were for them are for the first time feeling a sense of inclusivity. It may also speak to the usual but unfortunate phenomenon of the rotation of institutional or spark money to the hapless mum and dads at the peak of each market, though now it's their kids. The self-reinforcing herd mentality is also clear on show, but also the emotional connection with sectors or assets they have affinity with. Seasoned investors park emotions at the door. New investors who sense a generational buying moment, but do not have much background in the equity space. Citi chief US equity strategist Tobias Lakovich said in a note to clients in May. We have heard anecdotally about younger individuals with less market experience viewing the March plunge as a unique time to start portfolios and often crowding into the tech arena, purchasing the stocks whose services or products they know and use. And herein lies a potential opportunity for cryptocurrencies, gold and silver. Robinhood does not allow shorting on its platform. If users turn bearish, they don't have an opportunity to short shares. That will inevitably see them look for risk-off options. The platform already has Bitcoin trading available, and the usual gold and silver ETFs are there too. When the market inevitably rolls over, the same herd who bought the dip in March, where Robinhood had triple the new sign-ups with their government checks, may well see the next day turn as confirmation that the first was just a hope or bull trap rally, and there could be a race for the exits to uncorrelated hard assets such as gold, silver, and Bitcoin. Just as there is an affinity with the FAAMG shares with millennials, there is also with Bitcoin. Whilst Bitcoin has seen over 30% gains this year, and its silver cousin Ethereum up 84% this year, Bitcoin has been range bound for the last 2 months, whilst US shares have surged back from the March lows. The usually volatile investment has been one of the least volatile and dropped off the millennials' radar. This from Bloomberg. The largest digital asset has traded in a narrow band between 8,500 and 10,000 for the past 2 months, the longest it's gone without substantial movement this year. In addition, its 14-day Relative Strength Index, or RSI, which measures the magnitude and persistence of price movement, is at 48.5, a neutral point that underscores its muted range. If it breaks above its trend line, it's going to get some nice momentum, said Matt Maley, chief market strategist at Miller Tabak & Co. Maley sees demand coming from relatively young retail traders who use platforms like Robinhood, the same cohort that's sometimes been cited for driving the record comeback in stocks from the worst of their coronavirus swoon. While professional investors have scoffed at some of the youngsters' hubris and willingness to ignore danger signs, the thousands of small-time players could generate a frenzy if Bitcoin climbs past its 2020 high of $10,400, according to Maley. They're playing in another sandbox right now, but they're keeping their eyes on all the other sandboxes because they know that something like Bitcoin can make them big profit very quickly, Maley said. If it reaches a new high for the year, interest is that it's going to pick right back up and all those momentum players are going to say, I'm in. Ben Effart, managing director of QVR Advisors, says he sees a lot of overlap between the Robinhood types piling into shares of bankrupt companies, for instance, and those who were involved in crypto in 2017. It's a social media-like dynamic, he said. Someone points out a stock that's moving and posts some charts. An influencer says, okay, we're going to buy the calls, and then many people pile in. However, the likely drivers and hence public narrative of this rotation this time will likely be the growing understanding of the debasement of money that has occurred through the Fed and other central banks having propped up the financial asset prices that are crashing. It is often said that while crypto has arguably stolen a lot of gold and silver investors, it has also been the single biggest catalyst for millennials questioning what exactly money is, per se, and started the inevitable conversation about gold and silver's historic role in money. Crypto has likely introduced as many new investors to gold and silver as it has stolen. We've always maintained that they are a logical coexisting investment strategy. The combination of the Robinhood millennial herd, the extent of information sharing afforded to and embraced by this herd, and the value proposition that gold and silver will obviously present alongside Bitcoin, could see a large and new cohort rush to all three when this market rolls over. Great little insight there into Robinhood's gold, silver, and Bitcoin. Jump into our website, of course, over at Ainsley Bullion. You can read any of our articles. Hope you have a great day this Thursday, and we'll catch you tomorrow.